Hello, ladies and gentlemen. My name is Douglas Muir, and I'm the CEO and founder of the Family Business Fund. I want to welcome you to the first podcast of Traditional Investing is Dead, and it is. I'm here to prove this point week after week to help people like you that are just like me invest wisely. What I would like to discuss is, as a layman like you all out there, when it came to investing, I knew nothing. The funny part about my life is it's very interesting. First, I was an airline pilot. I was a captain for one of the major airlines. I did that for 18 years, knew nothing about investing, but would read the Wall Street Journal from front to back, almost quit the airlines twice because of the 1990s and the tech that was going on and the bubble that was bursting. And I learned a lot from just reading. I became really, really interested while being an airline pilot about entrepreneurship, about investing in companies, and I would really like to show you that you could do the same thing that I did to become successful and financially solvent. That is the big point, to become financially solvent. I help my friends from the airlines to Wall Street to be able to learn about what their portfolio is doing. Because most of you all, like me, don't even know how to read the sheet you get every month from your financial advisor. So here I am on the New York Stock Exchange, and what do I know? I'm an airline pilot. I'm a professor, right? And I'm looking at the volatility of the market going up and going down. I mean, you're talking to a guy who barely knew how to read my portfolio, meaning what did I invest in? My financial advisor would send me 20 sheets, and I'd look at this, and I'd see these big numbers. I'm like, I guess I'm doing well. Well, guess what I learned when I started learning how to read these things? Not so much and not a lot. And I had no idea that there was a better way. There is a better way of investing because, as the name of the show is, traditional investing is dead. I've always been curious, and even as a professor, I've been curious. And so what I did is I went out and I started learning about, remember this, alternative investing. Alternative investing. What does that mean? Alternative investing are investments that you can invest in as an accredited investor. An accredited investor is just a term by the federal government, and it means you make over $200,000 a year for the past 2 years, or that you and your loved one have a gross income together of $300,000, or you're liquid $1 million, right? So it's alternative investing. And there's other alternative investments out there where you don't need to be an accredited investor. It's called alternative investing. And that's what I want to talk about because traditional investing is dead. And I saw it. Here I am on the floor of the New York Stock Exchange. I'm watching the volatility go crazy, left, right, up, down. And I said, the better way is through starting my own fund. So I have a lot of money and I've done very well. And I wanted to take that money out and I wanted to start investing it myself. Just like more than half of America's doing with TD Ameritrade, for E-Trade, all this great stuff. But we need access to the information. And TD Ameritrade and E-Trade are not going to tell you about alternative financing or alternative investing. And why won't they do that? Well, think about it. You take that money out of the TD Ameritrade account and put it into an alternative investing account. They lose that money. They're not going to tell you about that. And so that's why when I started learning about that, I called up my broker and I'm like, hey, what's going on with my account? Why have you never told me about these alternative investment types of investing? The most famous alternative investing is called a REIT, R-E-I-T. It's called a real estate investment trust. Okay, a real estate investment trust is just a pot full of money that an investor like me or you could put 100,000 in, 20,000, and they'll pay you a fixed rate of anywhere between 9.5% and 12.5%. And now I'm pausing just for effect. 9.5% to 12.5%. My friend Eric called me up and told me about this. I said he was crazy. I started calling him Bernie. I said, there's no way you could pay that. My broker for 30 years has been paying me 6 to 8%, not including his 2% fee, right? And I took a risk, and I did it. And guess what? On the real estate investment trust, I kept on getting a check every month, every month, every month. It was like clockwork. It's called a fixed rate, and it was backed up by assets. Get my broker back up on the phone, and I'm like, dude, what about this real estate investment trust that I just took out $500,000 and I just invested in? And now I'm getting, 9.5% from the one in Austin, Texas. I'm getting 12.5% from the one in Sarasota, Florida. Why didn't you ever tell me about this? And now I'm upset. And I push and I push and I push. And you know what he said? He finally said to me, Doug, I don't make any money by putting you in a real estate investment trust or any other type of alternative investment. And I think they're too risky. I said, too risky? How? How are they too risky? I was just on the floor of the New York Stock Exchange. I watched this thing go up and down from one tweet. How is this more risky than that? And he couldn't answer me. He could not answer me. Now, I'm not going to be famous with financial advisors, but they're not my audience. You are. The main reason why I'm doing this is because I was just some schmuck airline pilot. No offense to all my buddies who are airline pilots, just flying around making all kinds of money, right? Pretty good money. And thinking to myself, well, my retirement should be ready and I'm about ready to retire. And when I started learning about alternative investing, I'm like, why doesn't everybody know about this? Everybody should know about alternative investing. So here I am. I'm studying and studying alternative investing. And I go to my wife and I said, why are we giving this financial advisor all our money? I mean, he just told me that really he could care less about our money as long as it's making a 6 to 8%, which once again, folks, is not bad and it's safe. I'm just not a safe guy. And I found out that alternative investing is even more safe. Why don't we take our whole portfolio of money and we'll start investing it ourselves. And she thought I had like 9 heads. She was working for a big bank and she was pretty high up there. I'm like, let's just quit and do this ourselves, right? I found out about alternative investing. We can invest in these REITs, and I did. And they were paying like clockwork, 9.5%, 12.5%. And so we went out for dinner with our CrossFit instructor. Yes, I'm 60 years old and I still do CrossFit. My wife's 47, so I did marry young. And we went out to dinner with our CrossFit instructor. His wife was a merchant cash advance lender, meaning that she worked for a company, and that company would extend cash to small businesses in the United States who could not get a bank loan. So let's say that you're going to make $100,000 in a month. They would lend you so much money on that $100,000, or that you were going to get receivables, meaning you were going to get paid back from another vendor, but you needed the money now. So we would just give you the money now and charge you some pretty high rates for that. But having said that, they could not get this money from the bank. And now this was right before COVID, and I was very interested. I was like, there's no way you can get those rates because they're called usury law. That means each state has a percentage that you're allowed to lend money to another person. You can never go over that percentage. The highest one is like 40%, which is in South Dakota. The lowest one is probably around the New Jersey range, which is about 10, 11%. Okay? So I can't lend you money more than 11%. But what happens if it's not a loan? That is the key. And so what I found out, that merchant cash advances are not a loan. We're just advancing cash on future receivables, and the spread was mind-blowing. It was mind-blowing. So I said to this young lady, give me one of your contracts. So as a broker, she had a business that needed $30,000. I gave her the money under a merchant cash advance contract that I had a lawyer write up. She went out, lent the money. The company paid us back like clockwork, and we got back $42,872 in 4 months. I couldn't believe it. I took my wife and we went out. We saw a very big lawyer in San Diego. We learned about this type of financing, if you will, and we just started using our money. And we put out millions of dollars out there on the market, and the default rate was almost nothing. These people were so appreciative that they could get money to expand their business. And we just happened to love the transportation business. And when COVID hit, our default ratio was very, very low. Now, we helped our clients take their payments and extend them out to lower them, to help them through the hard times. And being so appreciative of that, they never defaulted on us. I mean, it was great. And so then I thought to myself, well, I'm sitting on a few $1 million. Why don't I start my own fund? And that is called the Securities and Exchange Commission Reg D 506C fund. And that's what I started. So I started my own fund. And I have people like you invest in my fund. The difference is I pay 20%. Now, how do I pay 20%? Because I just told you the max percentage that I charge is a lot higher than 20%. And if you want to learn more about alternative investing, please call me or email me. Once again, my name is Douglas Muir. I'm the CEO and founder of the Family Business Fund, and I am here to help you invest safely.